Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, February 2nd, 2016. Already in the month of February. That's exciting. February is always a big month for us. Now, I hope all of you had a lovely weekend and are doing well this morning. And let me send a nice big shout out to our dear friends in Archive Land. Hope all of you are feeling great and doing well. Now let's go ahead and jump on into today's session. Get going. So please sit back, relax, and enjoy. And I'll turn it over to Gary. Thank you so much.
Good morning, everyone. Today is Tuesday. Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the new MPA PE3 software. Also adhere to very strict money management rules, which include never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give me a minute as I open up the charts. Okay. Good morning, Stacy, Andres, James, John, Harold, Bob Stark's in the house. Good to see you, Bob. So let's pick up with that's the pound. Let's start off with the euro. The euro is still grinding within this wedge. We thought we ended the wedge here and it was going to break down, but lo and behold, it came to our trend line and bounced up. So it appears the wedge wants to continue a little further. The same rules will apply as we had previously there, Al, that we should not expect price to break above 110.86. And more than likely it should honor, if we're still wedging, coming in more and contracting in a tighter and tighter range, we should not see price break above that 109.83. And it's likely that this D was over. This big up move ended up being my A. The big down move was my B. And now this last move up is the C to end this wave 4. And then once it's over, it should revert back to the downtrend. Wedges can be tricky from time to time, Stacy, because we never know if it's going to end up being a long drawn out wedge or a more robust A, B, C, D, E scenario. And in this case, it should complete in 3 waves, but these are very dramatic and long term, taking a lot of time to produce these little 3-wave moves. And again, this latest one, what could that have been? My A, my little B, and my C. Well, it was possible, but due to this latest price action coming down and bouncing back up, then it must mean that it's just the A here, the B, and the C to make up the E. So I would still be cautious to the upside in that, yes, the euro could grind a little further, but we have 2 levels of interest, that 109.83, which we're about 50 pips away, 53, 54 pips away, and then it certainly cannot break 110.86. So I would look for this to start to lose its incentive to the upside and look for an opportunity for it to turn over and head back down. Well, the other option is if it's not wedging, it must be this alt count of A over here to the far left, come down in a big B, and we're working on a big C higher. But again, I'm not going to take this alt count seriously until we see price break above 110.86. So that's why I'm keeping a keen eye on this wedge formation. And look, it's been playing out the last several weeks that it would go up toward the trend line, bounce down toward the trend line, bounce up to the trend line, bounce down to the trend line, and likely to bounce toward the trend line. But again, if it holds true, it should not breach it, and if it does, it's limited to this 109.83. And if it ends up breaking both of those and goes on to break 110.86, then I'm going to push this alt count, A, B, C scenario, to the primary, and I'm going to remove this other count to the alt. So they will flip directions or flip positions. Up and until then, I'm still going with the wedge formation preceded by downtrend continuation to complete this further down move. Long term, even if it turns out it's the A, B, and the C, they still will then turn over and revert back to the downtrend. So please remember, long term, no questions, the euro will go much lower. Long term. That is, what is long term, Gary? I would say over the next year or two. Long term, we're going to go down. The question is this going to be a longer term correction and revert to the alt count? Or is it going to continue with this primary count where we do finish this final push, wave 4 is over, and we start breaking down in the downtrend continuation? As we go to the software is giving us reason why we see the bounce. The Foreman and Workforce came down, bottomed and reversed, and moving higher. It's still pointing up, so it's possible we could see the euro grind up and down a little more sideways to upwards motion. But just like the last time we were over here during that corrective phase, what did we say? We said we're limited by how far we can go. We have that trend line coming off here, and where we touched, we came down, we touched, we came down, and we're likely maybe to grind a little bit higher, but I'd be very cautious. So if you took this bounce to the upside based on a Foreman and Workforce moving higher, I would definitely be peeling off some profits. The daily was and is still more or less pushing lower. Trend momentums are flattening. PAI is still down. So again, it's all a matter of the cycles. When the 4-hour cycle's down, it pushes the PAI down on the daily. When the 4-hour cycled up, it went up. Down, it went down. Up, it went up. Down, it temporarily went down, went back up, went back down, went back up. And recently, since it reached the top of our trend line, went back down on a big move towards that last Friday. And then, of course, coming in early this week, we're seeing a little rally. But so far, these trend momentum, as far as the PAI, has not turned back to the upside. So this looks like a law of diminishing returns, meaning we're traveling in a tighter and tighter and tighter range, which is typical of a wedge. So as we're wedging this process, that's good. Part of the wedge process is just one of those time-consuming corrections. And ultimately, when we see a lot of sideways to right, and moving basically sideways, a lot of chopping up and down movement, that is definitely corrective. Well, there are possibilities that this could be a leading diagonal wedge that would then give us a very deep retracement 2 and then a 3, 4, 5 as we ultimately move in a corrective move to the upside. So that's why you see both of these. If this is the alt count, we have an A, we have a B, and we're working on a C higher. And so far it looks like we got a 1, 2, and perhaps maybe another 1, 2, 1, 2, and a 3 of 3 of 3 going higher. Well, what's the key of this moving higher, James, is going to be the fact that we bust the wedge. We break 109.83. Uh-oh, something may not be playing out as expected. And if we go on and break 110.86, then I would definitely start to think the A, B in the longer term C is truly playing out. But we still need price to prove its intentions. So this morning, if you're looking for a trade for the euro, I'd be cautious to the upside. Yes, this could grind a few more pips, maybe about 50 pips higher, but it should be limited to that 50 pip range because of our dear friend sitting up here, which happens to be our wave C top of 109.83. So that's why I'd say caution to the upside, as yes, the daily still, the PAI is down, the trend momentum is flat, but the 4 hours getting in toward overbought territory. So let's look at that on the software once again. The daily PAI is still flat to down, basically flat on the trend momentum, slightly down on the PAI, but more importantly, the 4 hour is moving into overbought territory. So that's why I would say caution to the upside, as yes, this could possibly grind a little further, but we are getting into overbought conditions. And that would warrant taking some aggressive profits on this up move and looking for the potential reversal back to the downside. So if you're looking for a potential trade, if you're long, I'm taking profits. Once I see the 4 hour PAI start turning over, that would be a short scalp, because there's no guarantee if the 4 hour flips over, it can't then slingshot higher for this ultimately to make a run back toward the previous high. We would expect the lower highs we've seen over and over. We get a high, we get a lower high, we get another lower high, and this should end in another lower high. That means it's keeping that wedge formation. We need lower highs, lower highs, lower highs, and lower highs. That's what it means to be traveling and trading in a tighter and tighter range. So that's why I look forward to limited upside, if any more. Yes, maybe a little bit more, but should stay below this swing point high and must stay below that swing point high. That's my 109.83 here on this Ichimoku chart. And this is over here looking at the wedge formation. This is where we stand. So there's no reason to believe we must go any higher for this wave 4 to end. But if it does, it is limited. So this is like deja vu from last week. As we kept grinding higher for several days, it ultimately went right to the scene of the crime, that trend line, and then reversed beautifully to the downside until what? Friday afternoon, it started to linger and said, okay, I found a bottom. Then the last couple of days, it's reversed. Reversed with what? The foreman and the workforce. So you see how powerful the foreman and the workforce is. When they're moving up, price goes higher. When they move down, price goes lower. When they move up, price goes higher. When they move down, price goes lower. So all we need for the next short cycle is this foreman and workforce to flip over back to the downside. Any questions so far? So Bob Stark, it appears we have a beautiful wedge formation that's been following script now for several weeks. Once it's over, we're going to consider it over when what happens? When we break below the wedge formation and we go on to take out 107.09. And what happens if we bust the wedge, William Bruce, to the upside? We break 109.83 and we go on to break 110.86. Then, of course, if that transpires, then we're going to flip to the alt count of A, B, and C. But again, I'm not going to take this A, B, C alt count too seriously until I should say, we break 110.86. Once that happens, Houston, we have a problem because our wedge formation has been busted, and not only busted, but busted to the upside, and price proves its intentions by breaking levels it should not. Versus the wedge formation stays intact, we reverse and come down and not only break the blue wedge line to the downside, so all you would need to do is click on that line, extend it out a little further to give it a target for it to go busting below. And as we watch this, what can happen? We can come up here, come down, and break below. Well, I need more than just a break below the wedge line. I need a break below this 107.09. So everyone, please put these two levels on your chart. Big, fat, juicy, thick red line at 110.86, 1.1086. And a fat, thick line, green thick line, down here at 107.09. That represents the swing point low here and the swing point high there. So that's why when a wedge is still in formation, we should not breach below the low and we should not breach below the high. Those are the two to watch. This lower line here, 109.83, If the wedge is truly still holding serve, then it must not break above 109.83. But again, we're still over 50 plus pips to the upside on that. So any questions? This is likely to start to whimper out because the 4 hours in overbought territory. And when that 4 hour PAI and trend momentum, especially the PAI, starts to turn, I'm looking for a short, at least back down towards the blue trend line that it's done over and over and over, but should on the next go around break below it and head down to 107.09 and break below that. And then once we have one or the other, a break above 110, we'll go with the ABC, or a break below 107.09 would dictate that this wave 4 blue is over. So we're either in the midst of a wedge formation going down, or we're in the midst of a larger correction going higher first, but ultimately downtrend continuation as well. So please, as I mentioned, if you joined us late, we're expecting the euro long term in the next year or two to go much lower, including breaking these levels, breaking 104.61, marching down towards parity and perhaps below longer term. The question is it going to take more of a detour first before getting down there? Or is this going to be the end of the road here and we move lower in the coming months? Any questions? This could possibly take several more weeks back to the upside if this truly plays out my ABC. This literally could take several more weeks to complete that move, because I'm not expecting euro, even once it breaks 110, to go straight to 114 and straight to 117. It's likely to stair step its way and take considerably much more time in order for that correction to play out. Well, going back to the software, we can understand why we would see it that way. Well, if we're going to go busting the wedge to the upside, not only does the 4 hour need to start slingshotting higher and higher, and this daily needs to flip back towards the upside, but my weekly needs to continue to break and go higher and resist the temptation of turning back over. So my daily is starting to flatten out a little bit, especially the PAI, the trend momentum, but the PAI is slightly sloping down even though we got this bounce. Well, the weekly is giving reason behind that, because the weekly said, well, daily, as you've been going down to up, to down to up, to down to up, yes, we're turning, but we're still in an upwards direction. We haven't officially disengaged as far as this, we haven't officially crossed back to the downside. When this was turning over, my PAI was not pushing hard enough to force this to cross. Well, Gary, does that mean we're definitely going to go breaking up this direction? Well, no, James, if that's going to occur, we need price to prove itself. A, by breaking the top of the wedge, breaking that 109.83. B, by going up above 110.86. And if I see both of those, 109.83, followed by another 100 pip hike higher and breaking 110.86, then you would expect not only would this weekly turn and hook out, but the trend momentums will continue to go higher and higher and higher for weeks to come. And as that weekly continues for weeks and weeks and weeks, the monthly should also start to turn and move toward the upside. So this is why, while we're wedging it, that's okay for this to flatten and turn and temporarily take a hiatus, because my daily is not really smoking to the downside. Once the daily trend momentum and PAI starts smoking to the downside, then we're going to expect a big turn. Well, the monthly here on the PAI has turned up. Well, again, that has happened before. We've seen the monthly turn over, flip over, turn over, flip over, turn over, slingshot back down, making some new lows, disengage, re-engage. We've seen this phenomenon before. Trend momentums are flat, PAI starting to turn up. Well, James, because I'm seeing that, can I say I bet my life on it's going to go breaking 109.83, it's going to break 110.86, and it's definitely headed to 114, 117. Well, if this starts to continue to move higher and my trend momentum starts crossing to the upside higher, that's how we could get there, sure. But up until price proves itself, does not guarantee that is the case. Because what do we know? We know that this can be turning up, and all it needs is what? The weekly to turn back over, trend momentum and PAI start heading down, and the monthly flip right back down. And this flips from flat back to down. So easily we can follow how and why we would get a break to the lower side, and how and why what the software should look like if we go breaking to the upside. And the key level one more time is going to be, what does the cycling time frames as they cycle, what sort of signs and symptoms are they delivering, and how do the higher time frames react? So James, if I end up seeing the weekly disengage and the weekly moves all the way in overbought territory, and we see price break 109.83, 110.86, then yeah, I'm going to start buying the dips in the uptrend. That's what I love about the Forex market. It doesn't matter whether we go short or long. You still pay the same spread. If it's 2 pips, you pay 2 pips going long, you pay 2 pips going short. No matter how you slice it, you have to pay the broker their commission, which in this case is in the form of a spread. So whether I'm buying or selling, I pay the same spread, and it doesn't matter if we go long or we go short. The key is obviously when we go long, we want price to go higher, and when we go short, we want price to go lower. That's why we use the cycling time frames. So is everyone crystal clear on what we mean by the time frame cycling? That is using the trend momentum and the PAI. As they cycle together, price moves higher. When they come down, price moves lower. And we look for this on all time frames. So yes, the monthly's turning and hooking out, but we still haven't invalidated our wedge. So this does not mean there's no way the wedge will stay intact and we're going to go breaking lower. It means as my time frames start to cycle back down, this monthly PAI that's turning up is going to turn back down. Right, Stacy? We've seen it before. And we'll see it over and over and over and over and over and over again. Just like when we were in this uptrend, back when the euro was climbing higher and higher, the monthly turned down, turned back up, turned down, turned back up, turned down, turned back up. It kept doing it over and over and over. So there's no reason to believe it won't turn down, turn back up, turn down, turn back up, turn down. And continue to do so as we go breaking below 104.61 and down towards parity and below. Well, if that's the case, if we're going to go towards parity and below, we would expect the monthly to do exactly that in the inverse. Slingshot lower and lower and lower in the next year or two. Well, if you look closely at this phenomenon on this big uptrend, it took a few years to climb up there. Each one of these are a month, and you start counting the candles. There are numerous candles here tallying multiple few years, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 1 year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 2 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Just about 3-year period as we were grinding higher and turning back up and up and up. So don't let the monthly fool you by turning one direction. You think, oh, Elizabeth, here comes the big one. We're going to go from a high, a low, lower high. We're going plummeting down. And because the monthly started to turn, well, it flipped right back up. It started to turn, flipped up, started to turn, flipped up. It wasn't until up here when we got a slingshot that failed, double topping over here, then it started to plummet back down when the trend momentum and the PAI cycled all the way back to oversold. So we're in oversold territory. We've been that way for months. But it doesn't mean because the PAI is turning up, the trend momentum is going to go all the way back to overbought. All right? Just because the trend momentum is overbought did not mean when the PAI started to turn down, it was going to move from overbought to oversold. It stayed that way for a few years. Just like now. We've been overbought for several months now, working on a year or so. Doesn't mean it can't stay in this location, continuing its journey in oversold territory as far as the trend momentums. for another year or two. All right, by simply slingshotting, keeping slingshotting lower and lower and lower. That's how you keep a trend momentum locked in an area. Continue to slingshot. Well, if this is going to continue to stay in oversold territory, we must continue to slingshot lower and lower and lower and lower. Fair enough? So what's the key? Well, as long as my monthly continues to slingshot lower and lower, great. Well, my monthly's starting to turn up. Well, the weekly's been pushing higher for several weeks. Talking about the trend momentum. It hasn't flipped over yet. And yes, we did see this start to engage down. But it's not enough just yet to force it to cross over. So when do we think that monthly will turn and go back down? When the weekly trend momentum in the PAI turns. When do we think this monthly will start to flip over and engage back down? When the weekly trend momentum turns back down. When is that going to take place? Depends on the cycling time frames and the signs and the symptoms. Because once my daily trend momentum and PAI start pushing lower, this can continue to push lower week after week after week after week after week after week. And if that happens, then yes, the trend momentum is going to cross back to the downside. And if we do see the weekly turn back to the downside, I expect to see this will, in fact, turn and head back lower. Well, Gary, what if it's the A, the B, and the C going higher? Well, I'm still going to expect the monthly to flip back down and over once that rally would take place. All right? We're not talking too many pips higher. Several hundred, but not thousands and thousands and thousands of pips higher. So if this alt count plays out, my A, my B, and my C higher, then yes, we're going to continue to see the monthly go higher and higher and higher. And likely form a larger slingshot. And then ultimately when the weekly does turn over, trend momentum PAI does in fact turn back to the downside, we would expect this monthly to engage anyway. So James, you got that visual picture? If this is A and this is B and it turns out to be the alt count, and this continues higher for a few more weeks, maybe another month or so, and this journey's a little higher, that's okay. Because what happened after this multiple correction here? It turned up, but then it slingshotted right back down, and it's doing it again. What if this goes up and we do rally towards these previous highs? Maybe we break the 110 and we go to 114, 117 area, and then we slingshot back down. Well, that's why we're going to expect it to go from there all the way back down and toward parity anyway. I don't think the euro has finished its move until we're down at parity and below, which would include breaking 104.61. So pay me now, pay me later, we should see price below 104.61. And here's that level. So whether we go up here first and then down, or we wedge it out and then down, the key is we should go breaking below 104.61. So I'm not concerned I see the monthly starting to turn up. That's a good thing, because once it finally turns back over to the downside, we should see several hundreds and hundreds of pips back down. So if we're wedging it when that occurs, several hundreds and hundreds of pips back down would put us not only below 104.61, but a run towards parity. So again, yes, this is turned up, so it doesn't say, well, Gary, since my monthly and weekly are still going higher, I guarantee it's going to wedge out and break the wedge, and maybe it does. But I still need to see price prove itself. And as we've always said from day one, we want to force price to prove its intentions. And if my intentions are to break 110 and to go up to 114, 117, then we must break the wedge formation first, break 109.83 second, then go on to break 110.86. That's forcing price to prove its intentions. But if it does end up going that route, Bob Stark, we know what this should look like. This monthly should continue and even likely turn and continue higher, and even the trend momentum start to cross up for a little bit. We've seen that phenomenon where it started to cross down for a bit until it slingshot and turned back up. Cross down, turn back up. It's done that before and it can do it again. No need to have it go all the way that high. This could just increase for a little bit longer. But yes, if we go zooming toward 110, 114, 117 up here, then I'm likely to see the trend momentum give a slight cross. Maybe not crossing and coming out of oversold territory, but just a slight blip to the upside. At which point we then engage back down and we flip right back over. But remember, what causes the monthly to turn up? The weekly turning up. What causes the monthly to turn back down? The weekly turning down. Everybody with me so far? So my monthly is directly following the cycle of the weekly. Now we know that just because the weekly turns over does not mean the monthly is going to engage. But if it doesn't, what's going to happen? Well, my weekly will come down, price will go lower, monthly says no, then of course the weekly will be forced to slingshot higher. But it's always the case, James, that when the monthly flips directions, it's because the weekly forced it. It's just not every time the weekly turns does it force the monthly to oblige. Okay? Any questions? My weekly can turn, my monthly can say no, but in every case when the monthly does turn, it's because the weekly's doing it. How about that for a statement? All right, so my weekly is following suit. It's pushing higher at the moment, and this push higher the last several weeks with a lot of sideways movement is the reason the monthly PAI is turned back up. But again, I'm not concerned that it's turned back up because I understand as soon as the weekly trend momentum and the PAI start heading back down, that monthly can turn and go right back down as well as it's done before. Right? My monthly was coming up, turning, and then engaged back down when the weekly flipped. All right. So one more time, when the weekly turns, it should force the monthly to engage. So the fact that the weekly turned up does not deter the fact that this still could be the wedge play and end up coming back down. It just means the weekly is unlikely to go all the way into overbought territory, all the way into overbought territory. All right? That it's likely to start turning over and continue to push lower day after day, week after week after week, forcing the trend momentum to flip, in which we'll be back to the same result, trend momentum PAI headed down. Remember, the last time our weekly was in the middle of the road here and flipped back down, the euro went crashing hundreds and hundreds and hundreds of pips. Up here from this 114, it went all the way down to our 105.19. Just shy of breaking 104.61. It came very, very close. But before it had a chance to break in below, it flipped back up. But don't take it lightly when the weekly, even though it's in this location, flips back down. Could it force price to move several hundreds of pips? Well, yeah, think about it, James. If we're wedging here, and this went from 114 to 105, basically 900 pips, what if we're wedging out at 109? What's 500 pips? Back to 104 and below. All right? Just simply by flipping back to the downside. So in the coming days, I'm going to watch as my time frames cycle up and down. Is it going to affect the weekly and the fact that not only does the PAI start to turn and head lower, but enough to pull through with the trend momentum to cross back to the downside? That's the key. Will the trend momentum cross back to the downside? And once it does, then I'm going to expect much further downside, including a run at 104.61 and below. So I'm going to keep a keen eye on the monthly going higher. Not that I have to watch it every day. No, I only need to really watch that monthly PAI once the weekly turns. Once I got my weekly trend momentum and PAI down, then I'm going to anticipate the monthly will turn and start engaging down on the monthly PAI. Up and until then, while the weekly is still up, then we're not going to expect the monthly PAI to do anything but just stay in that state, pushing higher. Well, once my daily starts to turn and truly move from overbought back to oversold, I would expect this will force the weekly not only to stay pointing and engaging down, but to force the trend momentum to cross. And we haven't seen that, right? During this up, down, up, down, up, down, up, down scenario, the PAI has been flipping back and forth, but the trend momentums basically are kind of flat. And yes, early on it went from down back to up, down back to up, and then went back to down, then slightly up, slightly down, slightly up. So it's in a very tight range, basically flat. So what happens if we do end up with the wedge formation? Then this daily is going to flip back over. My trend momentum will turn and flip back over. And my PAI, whether it turns up to flip back over or stays flat and starts heading down, we're going to expect price to be limited how high it can go. And just because it's rallying a little further does not deter the wedge formation. It still can go higher, again, as much as about a 50 pip rally towards that 109.83. Now it's like 47 pips. But it should not break the previous high. Certainly can go that high and then no higher. If it breaks both of those, then yes, I would expect the daily to turn up, the trend momentum to turn up, both to continue higher for days to come. And then also as the daily continues higher, it's going to end up pulling this weekly up with it. And the trend momentum continues higher and higher and higher for several weeks, as we would expect. Yeah, maybe it is the alt count playing out. But before we jump to conclusions, anyone, James, Stacy, we want to force price to prove itself. And by forcing price to prove itself, we need to see the break of 109.83 and we need to see the break of 110.86. I combine those two. Hey, I'm speaking to you, Price. Price has proven itself, and I'm speaking as Price. Hey, my name is Price, and I'm proving my intentions by breaking 109.83 and 110.86. And following the software, we see this turning and hooking out, and we got a weekly trend momentum and PAI both up, combined with the monthly PAI turning up. That would bode well for this not only to break the 110.86, but to then go on and make a run towards 114, 117. And on this weekly Ichimoku chart, we would expect it to grind into the cloud, start grinding towards the top of the cloud, and maybe slightly above the cloud before the big reversal then unfolds. Well, remember, with Ichimoku, we got a lot of things in the way. Not only does it need to grind much higher to get to the cloud, but it's a lot of resistance to glide and chew through the cloud to break to the top of the cloud, and that's further resistance. And then it's got to chew through that in order to break above it. So it definitely has its work cut out for it to go all the way back into the cloud, and that would require the monthly PAI not only continuing to push higher, but the trend momentum continuing to push higher. That's how we'd get enough force to not only go on the weekly up into the cloud, start to chew through the cloud and above the cloud. Well, going back to this scenario on the monthly, we're only going to come in this area before we look for a top and reversal. We're not going to expect it to go way up here into the cloud. No. That would ultimately slingshot lower long before we go way up here in the monthly perspective. But the weekly perspective must chew into the cloud because that's how price is going to go back to revisit this 114/117 level. Here they are. There's the 114, and that swing point is the 117. Everybody good so far? So my monthly could push higher, and yes, we could break 110.86 and end up with that ABC, but until price proves itself, I'm not going to go that direction. I'm going to force price to prove itself before I think this wedge is over. And as far as that monthly starting to turn up on the PAI, as I just mentioned, once the daily trend momentum and PAI start headed lower, I expect this will revert back to pushing the trend momentum and the PAI down on the weekly. But how can we expect the weekly trend momentum to flip and head down when right now my daily trend momentum and PAI are not down? They're flat. right? So we know what to look for. We know what to look for as far as the software. The weekly is going to have to turn, and not only the PAI turn, but the trend momentum turn. In order to do that, I'm going to need the PAI to move from this overbought area down and oversold, and my trend momentum to cross back to the downside and head lower. We're starting to see the trend momentum turning back up slightly. It's done that before. Turned up and turned back down. Turned up, turned back down, turned up. So we can see as it goes above, below, above, below, above, below, we can see it changing its perspective. Well, that's why, as this daily could easily flip and start heading down, that could pull the weekly down, and the weekly starts headed down with the daily down, the monthly turn, and we're back to downtrend continuation. So Bob Stark, you got that? If we're going to go A, B, C, and go up another 800 pips to make a run at 117 area, then it's going to be required that the daily not only continue to move higher, the weekly trend momentum in PAI moves higher, and then the monthly will continue to move higher. But without price proving its intentions by breaking above and moving higher and breaking that 109.83, breaking the 110.86, I can't take that ABC seriously. And just because we're seeing this phenomenon where it's flattening and turning and starting to flatten out doesn't mean it. We watch as the 4-hour cycles up. Yeah, price should grind higher. That's a given. That's what we say every day. You want to trade the foreman in the workforce. So as my 4-hour went from oversold back towards overbought, the PAI went from oversold back towards overbought. This daily can flatten out. Look, it was headed down. The 4-hour reversed the last few days, and the daily hasn't smoked back to the upside. It's just more or less flattening out somewhat. All right? So far, so good. Well, what happens when this 4-hour that's pointing up turns back over? What happens when the 4-hour turns over, starts heading down? That's when I'm going to look for a little scalping opportunity back to the downside. Whether or not this is a wedge formation or whether or not it is the beginning of the A, B, C going much higher, we should still see a nice little retracement back down as the 4-hour moves from overbought toward oversold, like last time. And maybe it goes to the trend line, bounces off, goes back to the bottom trend line, bounces off to finally break out the wedge in the upward direction. But the key is to trade the direction of the foreman and the workforce. Well, what's a sign that this foreman, as it turns back over to the downside, we're not going to see a lot of downside movement and we're likely to see it move up? Well, when the 4-hour turns over, it then slingshots higher and higher. That would set the tone for the daily is turning back up, my weekly still pushing up, and both the daily and the weekly pushing up has forced the PAI on the monthly to push up, and that would warrant this slingshotting breaking 109.83, slingshotting breaking 110.86, as the daily continues to move from this current predicament and pushes back into overbought territory. The daily can either flip over and go all the way to oversold, or it can flip back up and go to an overbought. That will help dictate what's going to happen with the wedge formation. Is it going to bust it to the upside, or is it going to bust it to the downside? So in order to find out what's in store for the daily, we need to follow the direction of the 4-hour. And as my 4-hour switches directions, can I scalp that to the downside? You betcha. And is it enough to pull the daily trend momentum and PAI down? Only time will tell. But if I see the 4-hour turn over and we're still holding in the wedge formation and price goes smoking to the downside and the daily PAI continues down and the trend momentum crosses down and we see price break below 107.09, then we're going to go with that wave 4 is over. If I see price start to move lower and the daily just kind of fizzles again, and then the 4-hour flips back to the upside, either slingshots higher, reverts back to the upside, and my daily continues higher and higher, and we go on to break the top of that blue trend line on the upside, break 109.83, 110.86, then we're busting the wedge to the upside and the daily is pushing up. So clearly we can resolve this and simmer this down to what? If my daily goes all the way in overbought territory and we break 109.83, 110.86, then it's more likely the ABC is underway. Well, what if we don't break the ABC and we don't break the wedge in the trend line and the daily starts to flip and move lower and lower and we break 107.09? Then wave 4 is done. So back to this and closing on the euro. We have this formation, whether it's the wedge playing out or it ultimately ends up the bigger degree ABC correction. Only time will tell which one is truly playing out, and until then, we simply trade the cycles. We trade the foreman and the workforce cycle up, we trade it down, we trade it up, we trade it down. And once it finally manifests which one is playing out, as we bust the wedge to the downside, break out 107, or we bust the wedge to the upside and break 110, in order to see it go that way, we know exactly what it should look like. The daily is going to go all the way in overbought territory. The weekly will continue to push higher. The daily will turn over. The weekly will continue to push higher, and the daily will start slingshotting higher. That's how we would bust the wedge to the upside. Well, let's do the wedge to the downside. We bust the wedge to the downside. We break 107.09. We start headed down to 104.61 and below. Well, the daily is going to go in all the way from where it is to oversold territory. Once it starts to depressurize, it'll slingshot lower and lower, and my weekly will turn back to the downside, moving back to the downside, forcing the daily to slingshot lower and lower. So everyone has a visual picture. If we're going to go up this way, my daily is going to go in overbought territory, slingshot higher and higher and higher as the weekly continues to move from oversold towards overbought. And if we're going to go busting to the downside and breaking lower, the daily is going to flip. Trend momentum and PI are going to flip back to the downside. Once the 4-hour flips, it pulls the daily. And once the 4-hour and the daily start heading down, it pulls the weekly. And as the weekly is pulled down, the daily bottoms and then starts slingshotting lower and lower. So only time will tell. Does the daily start slingshotting lower and lower? We're going to bust a wedge to the downside. Does the daily start slingshotting higher and higher? Then we're going to go with the alt count. All right? And as my daily would then flip to turn, if my weekly says no, then we expect to buy the next daily, buy the next daily, buy the next daily, as we go banging above 110.86 and make a run towards 114/117. Otherwise, if it flips and turns as we're anticipating it's going to, like before, then when the 4-hour flips, I can go short, at least write it down for another move toward the blue trend line, because if this ends up being wave 4 over, it's not only going to go towards the blue trend line, it's going to break below that, head towards 107.09, break that, and head down towards 104.61 and below. And how would that occur? The daily turning back down, bottoming, slingshotting lower and lower and lower, and as my daily heads lower and slingshots lower, that weekly gets pulled from up back to down. And as my weekly trend momentum and PAI start heading back toward oversold, we would see what? The monthly engage back down. So everyone understands that line of progression. Go through the process one after the other. If my wedge is going to bust to the downside, the daily is going to move from overbought to oversold. The weekly is going to start pushing from overbought to oversold and flip directions. It's currently up, it'll flip down. And as the weekly stays in a downward direction, the daily will slingshot lower and lower and lower. Right? My weekly is clearly up right now, but once the daily goes from overbought to oversold, it pulls the PAI down and flips the trend momentum down. And I have this scenario again, trend momentum and PAI down, then that's how my monthly would engage down. And in order to do that, the daily is going to have to go all the way to oversold, depressurize, and slingshot lower. So no matter how we slice it, wedge formation, if it's going to bust it to the upside, the daily will be required to slingshot higher and higher. If the wedge formation is to break to the downside and continue lower, then we're going to see the daily slingshot lower and lower. And Stacy, how will I know if the daily is going to slingshot lower and lower? It's going to be based on the cycle of the 4 hour. As the 4 hour is up right now, yeah, price is grinding a little bit, but it's struggling because the 4 hour is in overbought territory. But once it flips over, is it enough to pull that daily with it? Right? So again, we can go short for scalp to the downside once this 4 hour turns and hooks down. Everybody good? Turns and hooks down. Turns and hooks down. Turns and hooks down. And once I have a 4 hour trend momentum and PAI down, that should give us a nice hearty, at least scalp to the downside, even if it turns out that it's going to be the what? Price breaking in the alt count. Because if my daily does not flip with the 4 hour, then the 4 hour is going to slingshot higher and higher. But up and until then, we should see some nice downside movement before it then would slingshot up. Well, if it doesn't slingshot up and ultimately goes from overbought to oversold, that's how it's going to affect the daily. Fair enough? So we know exactly what we're looking for. Is the 4 hour going to turn and go all the way from overbought to oversold? If that's the answer, we're going back down to the bottom blue trend line and likely to break it. If not, then the daily will just kind of sit hiatus and let the 4 hour cycle down and force it to then turn back up as the daily continues to push upwards. But again, long term, the daily must go in overbought territory and then start to slingshot higher and higher if the alt count's going to play out. And daily must go in oversold territory and ultimately slingshot lower and lower if it's going to be the primary playing out where we bust the wedge to the downside. Pound dollar. We had a nice rally, nice push lower. I had a nice short here. I'm in a nice long. So I've been trading it in both directions as the what? Foreman and workforce cycle down, cycle up, cycle down, cycle up. Well, remember what we said, is that wave forward done over here? Well, we went down, it looked good, and even made a lower low, but until when? It then went on to make a higher high. Well, James, what was the likelihood as we started to make a lower low we weren't going to continue lower? What happened? My weekly happened. My weekly never turned. So even though we went strongly to the downside, dropped a few hundred pips, went lower, my weekly never changed. The weekly decided not to change. Right? My daily engage, disengage, engage, disengage. So part of this down movement, the daily engaged down. Woohoo! Even made a lower low, that's good. And then it disengaged, went back up. Well, why would this daily disengage and fail and go higher? It's following the lead of the weekly. So everyone see what happened. What did we say? Well, this could be wave 4 over, we're making headed new lows. Well, if my weekly doesn't turn with it, it's likely to make a higher low and be preceded by a higher high. Everybody good? Preceded by a higher high. The weekly is still not flipped over. So that's why line of progression is king. Stacy, this is exactly what we're talking about with the euro. If my daily engages down and starts to move and doesn't move from overbought back to oversold, enough to warrant, well, it definitely engaged down. Red hook, blue hook, green hook. Life was good. It dropped a couple hundred pips. But what happened? During that couple of days of starting to engage and finishing engaging, what happened? That weekly never flinched. So it forced the daily to fail and disengage. So when I was watching this and I did this nice short trade for a few hundred pips, I turned around and went long because I saw this failing. And I saw during this period of moving these few hundred pips lower, that weekly stayed up. Uh-oh. Well, if my weekly stays up when my daily engages down, it is expected to fail. Everybody good? And it did fail, and where it should run when it failed, it should run back toward the previous high and likely to make a higher high. So back to our formation, and as far as the wave counts, is this wave 4 over with this latest spike, or does it still need to go further? The same rules would apply, James. What if my daily starts to engage again? Well, it did over here, and price did go lower, but it wasn't enough to force the weekly to turn. And if my weekly doesn't turn, then yes, we're going higher. Well, Gary, I see an A, B, C4 over here, and I see a W, X, and a Y. It depends on what type of correction is it. If this is an expanded flat correction, it could already be over, or is it going to turn into a more complex combination correction? Well, the ABC would warrant it going higher still. The WXY would warrant it being over in the early stages of a reversal, because we've gone from this swing point to a lower low, expanded flat, and the expanded flat should at least come back to the previous high and a little bit higher. Well, that's where we stand here. The euro did make a nice little push lower last night, and it bounced right back up. But is it part of this ending 4 and we're going a 1, 2 and starting to work our way down, or we still need more upside potential? How do I know? Back to the line of progression. I will know whether this 4 is done, yes or no, or it's continuing higher based on the daily. When the daily turns again, is it enough to force not only the slingshot to engage, but the trend momentum to cross to the downside? Everybody with me? So when I'm watching a slingshot engage, it can make a few hundred pips and the trend momentum not even think about crossing. Doesn't really even pinch off. It was such angle and separation. And it still made a few hundred pips from the swing point high to swing point low. So Stacy, what should the difference be? Well, if we turn over again and we see the trend momentum that's up cross back to the downside, then it's a strong sign this correction to the upside is over and we're starting to break back down. Where before, was it over? Maybe, but it didn't follow through. As it engaged down, the trend momentum didn't cross. When are we going to expect much, much, much stronger downside? When we get the PAI and the trend momentum down. PAI and trend momentum down. That's when we're going to expect another downtrend continuation. So no matter how we slice it, the pound, just like the euro, whether it has a deeper retracement or this is the end of the road towards the end of the retracement now and starts heading lower, the same things will occur. The daily PAI and trend momentum required to go down. If it's over, the daily trend momentum and PAI will head down. If it's not, then it will maybe engage, disengage, and continue to grind until perhaps the daily gets in overbought territory, turns over, and that starts the end of the correction. Well, Gary, what's the next level up of interest? The next level up of interest as we're around the 44 handle is this 4470 area. 4470. Well, Gary, is it guaranteed that we have to rally to 4470? No, but it is a battle zone. It's a form of support, turn resistance. So it's a likely target that this would rally to. So in closing, as long as the daily and the weekly are up, we're expecting further upside. If the daily starts engaging again, then I can trade that daily slingshot down. But if the weekly still says no, then look for the similar behavior. End up with another low and then another higher high. And in this case, we got a low, a high, a higher low, a higher high. So if the daily were to engage again and the weekly said no again, I look for another higher low, higher high. But once this is over, what should we see? We should see the daily trend momentum and PAI headed down. And we should see the weekly trend momentum and PAI start heading down. Everybody good so far? So Gary, is this over in the beginning of the move, or it needs to go further? Then it needs to continue. Well, up and until the daily trend momentum and PAI flip, we're not over. And once the daily trend momentum and PAI do flip, we want to watch how the weekly reacts to it. So what am I looking for? I'm looking for the daily trend momentum and PAI to flip down. And as the daily trend momentum and PAI flip down, I'm going to keep a keen eye on what the PAI does on the weekly. And if my daily trend momentum and PAI flip and start heading down, and this weekly that's turning up flips back over, then yeah, it's over and we're breaking new lows. Well, Gary, what if the daily starts to turn, the weekly says no, then it's probably not over, and it's going to continue a little higher. So everybody know the warning signs. Warning signs. Hey, correction to the upside is over. Downtrend continuation's continuing. We need the daily trend momentum and PAI to flip. Daily trend momentum and PAI to flip, and once it does, we would expect to see the weekly flip with it. But up and until my daily trend momentum and PAI flip and start heading lower, we're going to expect further upside. And next target of interest would be what now? 44.70. And that's basically about where this line is. 44.90, 44.70. It's in that range, and this is where this next line is on this daily. 44.90/44.70. All right? Well, Gary, does it must go up here before it reverses? Nothing would make me happier than to see this baby grind up here and then ultimately flip over and start heading down from there. That would be a great opportunity for it to finish that move. And as my daily trend momentum and PAI truly flip, we see the weekly join forces by turning over, then yes, that wave 4 is done. So what's the key for trading these? We continue to trade the direction of the 4-hour. When the 4-hour reverses and the trend momentum and PI are headed higher, we look to go long. When they head lower, we look to go short. And yes, the PAI is still starting to flatten out, but the trend momentum is up, so it's likely to push again. And why is that likely to push again and force the 4-hour to turn up? Because the daily trend momentum and PAI are up. Okay? Yes, yes. So as the cycles, we know that we trade the cycles, yes, but we use those to our advantage. And as they're cycling and I'm in a trade, that's how I know whether it's going to continue. How do I know to let this run a couple of hundred pips and not 1,000? Or 100 pips and not 200? Look at the direction of the daily. When my daily was engaging, yeah, it's okay to expect 100 pips, maybe 200. But because the weekly at no point started to flip over, it kept going up, you're going to anticipate in advance it's going to fail. And when it does fail, what do? We buy and go long. So James, you got the scenario. You got the rhythm too. You got the rhythm. The rhythm is in the cycles, up and down, up and down. And as they cycle, they give us signs and symptoms. When our weekly and monthly are down, my daily continues to slingshot lower and lower and lower and lower. Well, when my weekly is up, my daily slingshots and fails and disengages. Slingshots down, fails, disengages. Until the weekly changes. And up until the weekly can change, what should happen? My daily should flip trend momentum and PAI. So in closing, what am I expecting the euro and the pound to do? A little chopping up and down until price proves its intentions. Are they going to go higher respectively and then down? Or are they going to flip and go lower? Well, up and until the daily starts engaging, and perhaps this next go around when it engages, it's enough to force the trend momentum to go from up back to down, then we're talking it's over. And we not only need the trend momentum and the PAI down on the daily, right, pound dollar, daily, we need the trend momentum PAI down, but we need the weekly to follow suit. So if my daily trend momentum and PAI start heading down and that weekly turning up does flip over, then yeah, that correction is over. Well, what if this turns out to be one of those big combination corrections? Maybe it works on a triangle. All this up is an A and down and a B and a C, a D and an E, and this baby lasts for literally weeks and weeks and weeks. The weekly's not going to turn, right? If this weekly stays up when my daily turns over, then we'll likely see price come down again and then go back up and down and up, and maybe we are forming a wedge formation. So no rule to say that the wave 4 must end there and then go down. It could turn into what appears to be a, expanded flat to a combination could turn into a triangle. All of that's up as an A. We come down in a B. We go C, D, E. And the next thing we know, this baby stays kind of upwards for several weeks. And my daily flips up, down, up, down, up, down as it finishes the wedge. Then it finally turns over and it's over. So don't lose sight of that, because this does not guarantee that once the daily turns, this weekly must flip over with it. That's considering when the daily turns, the weekly turn, then the correction is over and we're in downtrend continuation. If again the weekly does not turn during that period, then perhaps this turns into a little ABCA, ABCB, ABCC, ABCD, ABCE, and the next thing we know, it's several weeks like the Euro's been doing, forming a big wedge. And that would be based on the weekly refusing to flip over and head down when the daily starts to push down. And so far, my daily engaged down, the weekly said no. That warranted a failed slingshot and a push higher. Could it happen again? Yes. The daily could engage, the weekly says no, and it could disengage and still come up for this combination correction. Well, we need a lot more price action to play out before the combination's over, so the daily would then push higher, top and roll, and at which point we get up here, we top and roll, and what happens? The weekly does turn as the daily moves from overbought to oversold. Then yeah, it ends in a combination and downtrend continuation. But what happens if we get the combination over here, the weekly daily starts to turn, but the weekly says no, and it forces the daily to slingshot back up? We come down, we go up, we come down, we go up, then it's the wedge. And there's no way, James, to decipher which one it's going to be. The only way to tell is while it's unfolding is to see the cycles and what sort of signs and symptoms they manifest. And the beauty of it, Al, is it doesn't matter what signs and symptoms as they roll, and that's how we trade, whether or not we're playing it for a wedge long term, or it's a combination, it's already over, it's a expanded flat and it's already over, we headed down, or it's this combination and then it's going to head lower. We still trade the cycles and we make pips on the cycles, and we don't really care whether it plays the expanded flat, the combination, or the wedge, because as we play the cycles, we look for signs and symptoms during those cycles. And if that weekly keeps saying no, then it's either turning into the combination or it's going to turn into a wedge. And only time will tell. S&P. S&P did a big rally as we expected it would, that we were not over to the upside. We expected we would see further corrective action, at least another few days into this week. Remember I said that last week, that based on the S&P, I was expecting a correction to continue for at least another Fibonacci 3 more days, or it could turn into a Fibonacci 8 more days. Alrighty then. So here's the S&P. Briefly go over the wave counts. And again, we simply do this based on what potentially could be unfolding versus what's reality is actually unfolding. And Al, we believe that we're going lower no matter what. There is no main bullish count going way up here until well after we come down here. That's the only possibility we're going to get breaking new highs, as if we come down here to finish that wave 4. And just because we come between 1730 and 1647 does not mean that's wave 4 over, it starts to bounce. It could be, but again, this wave 4 could stair step and go hundreds of points lower, as low as 1350 area, before it ends and goes higher. So the reality is, yes, during this corrective phase, I didn't think it was over until we got more upside movement. And that's exactly what we've been seeing the last several days. As prices grinded sideways, we got a big pop and we rallied. Now we're starting to see a big pullover and head down. Does that mean it's over? Is it going to continue further as we continue further in our retracement? Well, so far during this little pullback, Andres, my daily red starting to hook, but blue is up. Money flow changed angle, but it's still up. That does not bode well for this going crashing, making a new low yet. Right? My weekly is still turned up. That does not bode well for this to be the end of that correction either. So look forward for another potential push higher. Well, in order for this to continue lower, and it's too early to call right now because we see this little blip, that it won't force the daily to do something because the 4 hour is just getting started. Right? So we could certainly see more downside on the S&P, not expecting a new lower low yet. In order to get a lower low over here, breaking that 1804. Yep, 1804, 1804 low, we're going to require not only the 4 hour start to turn over, but move from all the way from overbought to oversold, overbought to oversold. And we're going to require that moving from overbought to oversold pulls the daily and forces it to engage and forces the trend momentum to cross over. That's how we would start to talk about this top and reversal is done, and we're in a slowly but surely stair stepping down to new lows. So Gary, based on this little movement lower, could we see it go lower? Yeah, we could see it go lower. We could see it make a run at 1887 down here. Why? Because it rejected off the purple line and should head to the goal line. Not a guarantee it's going to get there, but it's a likely target. And if my daily at this point comes toward the goal line, bounces because the daily stays up, then I'm going to look for the 4 hour either to slingshot higher or bottom and reverse. But while the 4 hour foreman and workforce is down, you should be looking on the short side. And we did break below the goal line, tested as resistance. So once we see it break the goal line and it tested as resistance, where should it go? It should go to the purple line. Right? This is looking at the 4 hour. And where did it go? Right to the purple line. What happens if we break the purple line? Could we come down here somewhere around the cloud area? Yes. It's certainly viable, and that's back toward that 1880 range. And we could come bouncing off the cloud and still go higher via a 4 hour slingshot. It's done it before. We thought it was moving down. Uh-oh, is that the end of the correction? No. 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 Well, how do we know these aren't the end of the corrections and downtrend continuation unfolding? Because we need to follow the line of the daily. And if my 4 hour turns over, my daily does not turn over, then look for another opportunity for this to rally back up. Is everyone clear how we can use what happened on the euro and the pound to trade the S&P? Do what now, Gary? We can use what we cover and discuss. So traders out there, if you're an ETF trader or stock trader, you can trade stocks based on what I tell and discuss on the pound. Well, what does pound dollar currency have to do with trading stocks? Everything. What does the Forex have to do with trading the S&P? It's about the cycling time frames and the signs and the symptoms, because the signs and the symptoms are identical no matter what the symbol. Fair enough? So if I had to guess which way we're headed, Andres, we're going to go lower first. But is it enough to warrant this correction is over, breaking new lows? Or is it another little correction before another dip and another push? a dip, and another push. The daily will tell us, because even if this starts to engage, right, my red and blue are up here together, what needs to happen? In order to be official slingshot, since they're holding hands up here, both the red and the blue need to hook. Everybody with me? Both the red and the blue need to hook. Well, this red can hook all it wants to. If blue says no, then this little down move is going to revert back to an up move and continue higher in the direction of the daily. So yes, we could grind a little sideways to lower, chop, chop, chop sideways to lower initially, and then look for another big bounce if this daily doesn't turn. Well, not only do we need the red and the blue to hook together, money flow to flatten and or hook, but we're going to require that slingshot to stay engaged day after day after day after day after day to force the trend momentum to cross. And Andres, if I see both of these, the red and the blue, the hook, and we're truly engaged, and my trend momentum up crosses over down, then we're likely to see the end of that correction. Well, I need to see the trend momentum in PAI down now. That's a start to say, well, it appears the correction is over. And it's going to be required to then force the weekly to turn. Because we know what happens when a weekly's up and a daily engages down. We saw it on the previous one. When I have a daily starting to engage and a weekly's up, what happens? It fails and goes higher. And what happened? We started to engage, red hook, blue hook, green flatten. We were engaging down there temporarily, and then what happened? It failed, turned and hooked out, and it rallied to new highs. Could that happen again? Engage, fail, disengage, and continue up? Sure it could. And I would say it's extremely high probability, Al, that if my daily engages down and the trend momentum doesn't cross and head down with it, and the weekly stays up like it has been, then there's an extreme high probability it's going to do it again. Slingshot, engage, fail, and disengage and go higher. So back to the schedule. Is it this 3-4 still unfolding? It may be, or it could be my 1-2 green. The 3-4 magenta I've removed because it's unlikely to be that one, because we're now moving into an area it should move into, and it's taking too long and the weekly's not turning. So it's either a 3-4 or a 1-2. As price reveals itself, we're likely to see what is transpiring. Well, what happens if we go higher? It still could be my 4 blue or my 2 green. What if we break 1983 before this correction is over? Then it must be my 1-2 green. So the only thing that differentiates 2 and 4 here is if we go above 1983. Well, what happens if we go higher again, but we don't break it, and then we flip and go down? It still could be my 2 green or my 4 blue. And what's the difference in 2 green and 4 blue? Not much. Because we're still expecting when this reversal occurs, we're going to break new lows, and we're still headed to this target zone. If it's the bearish of the two, Elizabeth, I'm coming to join you, honey, and it is the 1-2, so the difference would be we're expecting much, much, much further downside, longer term, in a 3 of 3 of 3 of 3 of 3, and that gives me a 1, then a 2, 3, 4, 5, and we subdivide, subdivide, subdivide for years to come as we go crashing down towards 665 and below. Well, what if it is the 3-4 and we're headed lower? Then we're going to probably correct in the wave 4 green. But both are subdividing in the same nature, threes to the downside. The difference would be whether or not we break 1354 area. If we break below that, then we can no longer be in a wave 4 correction. So unfortunately, Elizabeth, I'm coming to join you, honey, and the bullish of this bearish scenario will not diverge for quite some time. Bottom line is, regardless of whether 4 blue is playing out or 2 green is playing out, both are requiring a lower high and a lower low. No matter if we go a little bit further, lower high, lower low, or we stay below this 1983 lower high, lower low, or it's already over lower high, lower low. Any questions? So Andres, I'm still expecting a little more downside first before then perhaps going back up. Well, if my daily doesn't officially turn and start engaging down and including the trend momentum crossing down, which then forces that weekly that's turning up to turn down, then it's not over. Even though we come down, it's not over, and we look for another rally back up. Everyone crystal clear that this should simply be a dip and another push higher if the weekly stays up, and if that daily even engages down but the trend momentum doesn't cross to the downside, then it's going to look similar to what we saw in the pound dollar, where the daily engaged, disengaged, and it kept going higher with the trend momentums. So we have that scenario. The weekly is up, and if it doesn't start to turn over, then the correction can't be over, and my daily is not in a position to ultimately force the weekly to turn without not only engaging down and flipping over, but the trend momentum crossing and headed down. So any questions? Well, Gary, is it guaranteed if my trend momentum and PAI start heading down on the daily, the weekly must flip and turn? No. But if my daily trend momentum and PAI do head down and the weekly does turn, the correction is over. So Andres, you got that? We're going to stair step sideways, chop, chop, chop sideways to lower first. Then likely we're going to get a 4 hour to engage back up, especially if this daily never truly engages over and the trend momentum heads up. Well, what if it does, in fact, pull this down, we come down, and this does turn and the blue and red start hooking and green flattens, and we get a full-blown engaged slingshot. Well, then it must continue day after day after day after day after day and force this trend momentum that's up to flip over. And once I see both of those, trend momentum, PAI, both down, and the weekly says, wow, daily, you took strong strides here to not only engage, but you forced your trend momentum that was up to flip back to the downside. So now I'm going to take you seriously and look that this correction is over because the weekly's turning. And what happens when the daily trend momentum and PAI head down, the weekly flips back down? Then we're going to break 1804, head to 1730/1647. 1730/1647. Everybody crystal clear on that? Why we believe that's unfolding? Again, if I had to guess my way, perhaps we last another week of a correction, and we go through the rest of this week just chopping sideways to higher as the daily moves in overbought territory, at which point the daily trend momentum and PAI crosses to the downside and the weekly PAI pointing up flips over. That would warrant the end of the move. Is it over here? Maybe, probably not. And maybe, probably not, based on a daily PAI still going up and the trend momentum still going up, but most importantly, the weekly still going up. So what happens if this turns into the daily engaging down? Again, it needs to force the trend momentum to cross, because the weekly up means a simple engaging slingshot without the daily flipping too. Then this slingshot's going to fail and it's going to turn and go back up anyway, just like the pound. So look to take profits on the down trade and look for this to turn and go back up higher based on a weekly PAI still headed up and a daily trend momentum and PAI headed up. This should simply force the 4 hour to engage higher, looking for a rally higher. Doesn't necessarily mean it must cross 1983, but if it does, then you're going to see this 3-4 come off and it'll be a 1-2 green continuing its journey further. And how high can we go and where should we not cross? 2074.50. My swing point at 2074.50 should not be breached. That's this red line here and matches up with our Fibonacci. So we should not under any circumstance see the S&P rally that high. Could go higher, could break 1983. If it does, it's now 1-2 green. If it breaks 1983, it can no longer be 3-4 blue because it went into the area of wave 1. So it must only be the 1-2 green. But even with that, we would expect it to reverse somewhere between that 1983 and that 2074 and not go above it. And I highly anticipate this rally, even if it does continue much higher, is going to start to lose its momentum, flip over, and start grinding back strongly to the downside. So in closing, whether it's a 3-4 or a 1-2 green, we don't care. We follow the line of progression. Once that foreman and workforce flips back up, look for another push back toward the previous high, and very likely to make a higher high. My weekly still up, it supports that case. My daily trying to engage, disengage, but the trend momentum stays up, supports that case. Fair enough? So as long as that weekly PAI is up and my daily trend momentum is up, it supports the case of this little pullback being a dip in order for another rally up. And yes, we could go above 1983. Does not matter, does not deter the fact that we're still going down here. Even if we go above it, we're still going to go down here. So any questions before we move on from the S&P? Weekly PAI up bodes well for this little dip and another push higher. Daily trend momentum up bodes well for this little dip and another push higher. So if I see this daily not engage and stay pointing up, then I'm going to buy a 4-hour slingshot. When is this 4-hour likely to engage up? When my 15, 30, and 1 hour gets into oversold territory. And so far, the 4-hour was moving lower, disengaging, so the 1 hour bottom slingshotted lower. Bottom slingshotted lower. So it doesn't mean because the 1 hour is now down here, the 4 hour is going to engage. Well, Al, what happens if my 1 hour turns back up again? The 4 hour still says no like it did here. Then we can sell the next 1 hour. So I still think we're going to see chopping up and down, sideways, perhaps a little lower, as the workforce finishes its down cycle. If I see the workforce start pushing higher and the 4 hour engages, then I'm buying and going long. And I would expect to run back at the previous high and likely to make a higher high. And if I buy a slingshot off of here, I would take profits around this goal line. And then once I break the goal line, I would look to take profits at the previous high, expecting we're going to get a higher high. Black Gold, Texas Tea, the Beverly Hillbillies. Is my 4 over and we're crumbling, or is 4 going to continue and then we crumble? Is this part of an A, B, C, W? This is an X and we go back up in Y and we end up over here or higher? Or is this the end of the road and we're already starting with the downtrend continuation? I still say no matter what this does in this correction, it's still going to end up with another lower low. I still say this low here is not the end bottom reversal for oil. I've heard some projections as low as like $10 a barrel. It's possible. We could go into the teens and below. But before we get carried away and say oil's going to drop another $20 down to $10, we need to see price break the previous low, and we need to see it achieve our next target, 2610. So let's look at the cycling time frames and how things are progressing. The weekly is still up, and if we don't see this baby turn over and engage down, then this little down move is not the end of that correction. Everybody with me so far? This weekly must turn and flip back over in order for this down move to continue to break new lows and head towards 26. So if my weekly says no, my daily's turning over. What do we know about this, James? When a daily engages down, price moves lower. Yes, because the foreman and workforce are going from overbought to oversold. The daily PAI starts to turn and engage down. That's good. But if that weekly stays up and doesn't turn, then what's going to happen? It's going to fail. It's going to disengage, and we're going to grind higher. So far, so good? Well, it's too early to tell. We've been engaging down the last couple of days and prices moved down, yes, but we don't have that crossover yet. Trend momentum 1 is starting to pinch off. We're getting close to a crossover, but that's a key component. Is it enough to force this to turn over back down, Or is it going to be one of these that engages but doesn't force the trend momentum to cross and then fails and turns back up? So James, the same signs we've been talking about on the euro, on the pound, on the S&P, we can talk about on black gold, Texas T, Beverly Hillbilly. So again, proving the point, I don't care what you trade. I can teach you to trade any symbol by showing you one symbol in any financial market based on the cycling time frames, the trend momentum, how they cycle up and down, and as they do cycle up and down, how it affects the higher time frame. Meaning if this weekly does not turn over as my daily starts to engage and push lower, forcing the trend momentum to cross back down, and the weekly says no, then this little down move on the daily is going to be short-lived, and it's going to force us to disengage. What happens if that occurs? We get the daily engaged down, the weekly stays up, and it disengages and heads up. Then, James, I'm going to expect price to rally back toward these previous highs. I'm going to expect it's going to rally back towards our 35 up here, and likely to even break it and go up toward the bottom of the cloud, perhaps seeking the 38 range, 38, 39. So this correction could last for several more weeks. By no stretch of the imagination does this guarantee this wave 4 is over. This could turn in from that simple zigzag to a combination correction, could turn into a wedge, right? Remember that wedge formation could turn into a reality. My weekly stays up, my daily turns over, engage, disengage, engage scenario, and we get an A, B, C, D, E, and wave 4 in somewhere over here. Or it turns in and it ends up here. Or it turns into a zigzag combination and ends up right there. The key is the weekly is going to require to turn. And if my weekly persists pushing higher and higher and higher for weeks to come, then it's more likely a combination correction to perhaps a wedge. So James says he's got it. He said it earlier on the pound. So if you had it on the pound, you got it on the oil, right? Same scenario. Exactly. So is this move down over and we're going to go soaring back up? Once that daily slingshot disengages and starts heading higher, you betcha, right? We see this turn and hook up, we're going to go rallying back toward the previous high and likely to break the 35 range and go in towards 38, 39. Or basically migrate towards the cloud, bottom of the cloud. Ichimoku daily chart. This disengages out, you can go long and not only expect price to rally to the gold line, the purple line, and above, but likely to break that and make a run toward the bottom of the cloud. Simply by this turning and hooking out. Well, when is this slingshot down likely to fail? When our 4 hour gets into oversold territory and turns back up. Not quite there yet. Yeah, we move from overbought to oversold, but the trend momentum and the PAI are not up. Red and blue are turning up, but green money flow is still down. So I do not have a 4 hour trend momentum and PAI up. Well, when's it likely the daily is going to disengage and head higher? When the 4 hour trend momentum and PAI both turn to the upside. Both turn. So in the interim, what should oil price do? Chop up and down sideways, perhaps a little bit lower as it finishes the cycle. Then I would look for this daily being tempted to disengage. No guarantee, right? Is it possible? What happens if this happens, James? Well, my daily doesn't turn and hook out when the 4 hour bottoms and reverses. The daily stays down, PAI. In fact, at the end of the day, this crosses below, and we see going into tomorrow, we got the trend momentum PAI down, and it stays down day after day after day after day after day after day, and we end up going from here all the way back to oversold. Then yeah, that is how we would force the weekly to turn. So it's no guarantee that this isn't over and we're not going to go higher. We need to see the cycles. Everybody crystal clear on what I mean by the cycles. And just because the 4 hour starts bottoming and turning up does not mean this will disengage. But if I get the 4 hour foreman and workforce up and this does disengage, then I guarantee it's going to make a run back towards the what? Gold line, break that purple line and make a run towards the high and likely to break it. But it would take two things. The PAI turning back to the upside as my foreman and workforce bottom in reverse, and of course, that weekly maintaining its upward posture. What happens if the inverse? What if, William Bruce, what if this weekly does in fact engage over and it's just early now because my daily's been engaging down and prices move lower, but we continue another day, 2, 3, 4, 5, and the trend momentum does cross? Then it's likely if that occurs, meaning this continues to persist day after day after day, and the trend momentum does cross to the downside, then it's a high probability the weekly will follow. So James, what do I need? I need the trend momentum and the PAI to cross down. That's when we have the possibility of the weekly engaging down. Up and until then, if this turns and hooks out, and this does not cross over down, and we see this turn and hook out, then your strategy is to buy and go long and look for take profits as we rally back toward the previous high and likely to go towards 38.39. What if it's over right now and it's done? Stick a fork in it. Then this will persist down, 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 day after day after day. My trend momentum will cross to the downside, pushing from overbought back toward oversold. And as my trend momentum and PAI move down on the daily, the weekly submits. And the weekly says, okay, trend momentum, PAI, now that you're pushing lower, I'm going to submit to that and I'm going to engage. Fair enough? And what happens if that occurs? My daily continues, the trend momentum crosses on the daily, forces the weekly to engage down. Then say hello to my little friends down here at 26. Any questions? So my wave 4 correction, Al, may or may not be over. Really doesn't matter if it is and doesn't matter if it isn't. We know what signs and symptoms to look for. If the 4 hour foreman and workforce bottoms and reverses and that daily slingshot disengages, then we're buying and going long with the expectations of a run at the previous high and higher. Everybody clear? Say that again, Gary. If the daily disengages when the foreman and workforce reverse and start heading higher, the daily slingshot disengages and turns up, then we're going to ride price back to 35 and above. If the slingshot stays engaging and does not turn and hook out when the 4 hour depressurizes, then we're going to continue with the downtrend and we're going to sell the 4 hour slingshot lower and lower as the daily continues day after day after day after day down, and we're going to look for the weekly to turn down. So I painted the Picasso once again. That's part of the scenario with the GMF and the cycling time frame. It produces signs and symptoms as they cycle up and down, and whether or not it's this wave count or it continues higher is not to confuse our students, but to give them insight that what if this does disengage and go higher, then we know if it disengages it's going to run back toward this high and likely above. And yes, this 4 way up here doesn't mean if it disengages and goes higher it's definitely going to come way up here. It's just an illustration that this wave 4 could go as high as 45.78, but no higher. I don't think oil price is going to go to 45.78. Could they go above 35 to 38.39? Sure. Could they go to 41? It's possible. But we know what that would mean. The daily not only disengages and continues higher, but when it turns over, it slingshots higher and higher as the weekly continues to push. So based on our line of progression, we know if the weekly stays up, the daily should disengage. When it does disengage, I want to go long and ride price to a new high. Then when it flips back over, the weekly still says no. Then we look to buy that daily slingshot higher. Fair enough? So daily disengage, we go long and shoot for this target up here. And if it does continue and flips over and the weekly still says no, then we look to buy daily slingshot higher and daily slingshot higher up and until the weekly starts to turn. Well, what if it's already over? We know what the signs and symptoms will be. The daily will not disengage and turn up when the 4-hour starts to depressurize. It'll depressurize, the daily will say no, and then we'll sell 4-hour slingshots lower and lower. And as my daily flips and continues down, 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 and the trend momentum crosses down, the weekly is expected to turn. And if all three of those occur, say hello to 26. So now I have a very specific strategy to go long or go short. And Al, I guarantee if you follow these suggestions, you will be successful. You cannot be anything but successful if you follow these suggestions. If the daily is going to turn and hook out, the probability of it going back up here is exceptionally high. It doesn't mean it's going to go straight from 30 straight to 35. It means it's going to stair step its way up, but should ultimately make it up here. And what happens if the daily says no when the 4-hour starts to depressurize and the slingshot stays engaging? Then the likelihood is that if it depressurizes, yeah, we can see a little bit of a retracement, but the daily stays engaging down, the weekly stays, at that point could be up to flat, that's fine. And what? My 4-hour depressurized, then I'm going to sell the 4-hour slingshot, continuing to ride this baby lower. I have a strategy, and I know I'm going to either buy the daily when it disengages and goes higher, or I'm going to sell the 4-hour slingshot when it bottoms and reverses and continues down. So all eyes should be on oil on my 4-hour time frame. As my 4-hour starts to depressurize, is it enough to force the daily to disengage? If the answer is yes, then you want to go long and ride price up about $5+, and we make a run back to the 35 and above. If it doesn't, and this stays in a downward direction, red, blue, green, everybody down, when the 4-hour depressurizes, then look to sell the 4-hour slingshot in the direction of the daily headed lower. And if I see this continue down and my daily trend momentum actually crosses, and it sets the tone that perhaps that correction is over, and the daily trend momentum and PAI start moving from overbought territory towards oversold, overbought towards oversold, then I expect to see the weekly will follow suit by turning over and engaging down. So everybody knows exactly what to look for. And if that turns out to be the case, the daily says, nope, I'm done and I'm going all the way to oversold, and weekly engages, then we're going to continue on the short side and look for 26 to come into play. So break below the swing point low and head towards 26. Right? So that's my target. 26 down or back to 35 up. 26 down or 35 up. And what signs and symptoms are going to lead us there? Daily disengages, we're going back to 35 and up. If daily says no and the trend momentum ends up crossing down and the weekly engages, which should all happen together. My daily does not disengage, the 4-hour depressurized slingshots lower and lower. The daily persists lower, the trend momentum crosses lower, then we're going to expect that will continue for several days, in which the weekly will and then engage and continue with the process and say hello to 26. Yellow gold. Still, we thought may have finished this correction as it reached our target and started to flip over. I did take profits, and when I saw this slingshotting back up, my daily went from down to slingshot back up. I actually scalped this to the upside. Why? Because the weekly is still holding serve, right? So we didn't say that this had to absolutely, because it reached the target, be the end of the road and down we go. It still could rally towards 35. We still haven't reached 35 yet. And we saw this turn over and do what? Slingshot back up. Everybody see it? So when I was short here, I took my profits and then boom, went back up to a new high. Well, what happens when the daily turns over again? I can short it back down. Everybody good? So what happened here that didn't happen on the up? Well, my PAI turned down, but my trend momentum did not. Everybody see it started to pinch off, and think about it. As it started to move lower, it was pinching, but didn't cross. So you see the power, James. We require both the trend momentum and the PAI to be in the same direction. That's when we can anticipate longer, more time-consuming, and more robust moves. And yes, this was several dollar move during when that turned and hooked out, fine. But it wasn't enough to force the trend momentum to cross, so it lost its momentum to the downside and went back to the upside. And why would a daily perform this way? Why would it try to slingshot lower, fail, then turn into a slingshot higher and higher? What about this price action is screaming at us about the weekly? It's screaming the weekly is not facing down, it's facing up. That behavior of slingshotting, disengaging, tells me the weekly's facing up. And Andres, I don't even have to look at it to know, based on the behavior of that daily, engaging, failing, disengaging, and then turning over, slingshotting higher, turning over, slingshotting higher, that the weekly is truly up. So therefore, that bodes well for further upside. Well, because my weekly trend momentum and PAI up, does it guarantee that this is that 5A over here and we're on the big correction going back up already? Not necessarily. All right, so what are our wave counts? It's a matter of, is 5A done or is it still unfolded? Is A complete? Yes or no? A complete? Yes or no? This is no. This is yes. Well, if this is yes, what do we have? 1, 2, 1, 2, 1, 2, 1, 2, and a series of 3 of 3 of 3 of 3s going higher in B. Well, what if it's not? And this is part of the next 1, 2, and we're in the midst of a 3 of 3 of 3 of 3 of 3 headed down. So what is this telling us during this correction? If A is done, we should start to see some very robust movement higher. And if A is not done, we should start to see some very robust move lower. What differentiates the two? 1191.41. This 1 going up in 2 cannot cross where this wave 1 originated. And a little 1, 2, 3, 4, 5, 1, and we're moving up in a 2. Wave 2 cannot go into the area of wave 1. So if we break 1191.41, then we're going to switch to A is done, we're going up. If we don't, and we go a little higher and reverse and start heading down, then obviously wave A is not complete. And again, I'm going to hold true to the long-term observation that A is not done. No matter if we go roaring up higher, A is still not done. Up and until we break 1191, I'm expecting A is not done. James, Andres, Harold, Ian, Marty, Roisin, Stacy. A is not done up and until we break 1191. Well, Gary, 1126 to 1191, that's a huge move to get up there. Yes, it is. And we're struggling, yeah. And my weekly's up, so we could go further. My daily engaged up, but this next go around doesn't mean when it flips and turns, we not only start to move lower again, but we break the trend line. So I want everyone to put this little trend line on their daily chart. From the swing point low of this wave 4 potentially, or perhaps my 2 green in the bullish count, or my 4 magenta in my bearish count, we start to look for this scenario that we see this swing point low that happened on January 14th, the low of 1071 is critical level. And from that, I'm going to draw the line straight across and touch, touch, touch. And price has been rallying, pulled, bounce, rally, pull, bounce, rally, pull, bounce. So part of this equation, Al, is a trend line break. We not only want to see what? The daily turnover and start heading down. Yeah. But we want to see price go and break this blue trend line. That will be the beginning of support towards this wave 2 green being complete as we break the trend line. Then as we stair step lower, we need to go on and break 1071. Once I take out 1071, break the trend line and 1071, that's pretty much a foregone conclusion. This 2 is done and we're headed down in 3. Well, what if it's the bullish count? Then this trend line should hold as we go higher to complete this 1 2 1 2 1 2 scenario, and then eventually we could have price break the trend line and a higher degree correction 4s down, but we would still require much further upside in the trend line to hold for considerably longer, probably making a run toward that 1158/1191 area, much higher, before we see a breach. So now you have another visual on our Elliott wave chart. A blue trend line. Everybody remember how to draw it? You go up to your trend line and then you click at the bottom, drag, and pull it across till it touches these lines, and then you let it go. Well, Gary, and I'm going to take it off now since I already have one. Cancel. So what am I going to do with this over here? I can click on it to extend it. What if this trend line extends further? Then you just click on it and extend it. Meaning that price continues to grind. Whoops, that's too much. Price continues to grind and it pulls back and bounces and pulls back and bounces, and I can keep extending that line by simply clicking on it, dragging the edge, and continuing with the direction. So everyone clear what we use trend lines for? It's an early sign and symptom. This 2 is beginning, like the initial confirmation that we have wave 2 over as we break the trend line. Because before, we didn't do it, we didn't do it, we didn't do it. So will we do it this time? That will be the earliest sign that wave 2 is done. But that's not a confirmation wave 2 is done, because it must come on down and break at 1071. Once I break the trend line and 1071 low here, that sets the tone that 2 is over, and we're in a stage of 3 green, of 3 purple, of 3 blue, of 3 black, headed down further for wave A. And again, what if it is over and we see the trend line breach? We're going to see the weekly start to turn back over. And more importantly, before then, we're going to see the daily start to turn over. And we not only want the PAI to turn out, we want the PAI and the trend momentum. So you know what I'm going to be saying the next several days coming. Once the daily trend momentum and PAI cross to the downside, you should be looking to sell the rallies in a downtrend. And if we're able to break the blue trend line, that only adds additional support that the daily's ready to move from overbought to oversold, overbought to oversold. And if we continue to stair step down and break the low of 1071, then that really sets the tone right here, breaking that low, that wave 2 is over and downtrend continuation is unfolding, as we would expect the daily to go from overbought to oversold, overbought to oversold. And of course, based on that scenario, moving from overbought to overbought to oversold, the weekly follows suit by then turning over and heading down. Everybody with me? Turning over and heading down. But this weekly cannot turn over and start heading down until the daily trend momentum and PAI cross. Fair enough? The daily trend momentum and PAI needs to cross to the downside, is required to cross to the downside before this weekly can truly start engaging and turning. And once we see this turn and engage down, we're going to want to see what? The trend momentum follow. So as it starts engaging week after week after week, we want to see the trend momentum cross back to the downside. That's when we know we're not only going to break 1071, we're going to go on and break the previous low and head down to 1,000 and below. So Greg Toussaint, put the blue trend line on your chart. Homework, put the blue trend line on your chart. And if we're able to see the daily turn over and start to turn the trend momentum and PAI cross combined with a break below this trend line, that's the initial sign and symptom 2 is done. Confirmation 2 is done. We continue to stair step down and we break the low at 1071. Combine not only the daily trend momentum and PAI headed lower, but the weekly turns. Whoops, that's the wrong chart. Daily, the weekly turns. So what's the final confirmation? We get the blue trend line initial confirmation, the breach to the downside. My daily trend momentum and PAI head down, and as they continue to head lower, the weekly starts engaging and headed down, and we break 1071. Those two combined, breaking 1071 and the weekly change in direction, is the final confirmation. 2 is done. We're headed down. We're going down to 1,000 and below. So any questions? Any questions? We could likely see a little more grinding. That's okay. It could grind even above 1135. That's okay. It cannot break above 1191. And the only way I'm going to take this wave A serious is being over, and we're in the early stages of a multi-month, probably even a few year rally higher, would warrant a breach above 1191. And if we get that, then we'll start to buy the dips in the uptrend for months and months to come. But remember the key. In the midst of an uptrend, I can still trade to the downside. In the midst of a downtrend, I can still trade to the upside, as long as I have the cycles with me. Fair enough? Any questions on black gold, Texas Tea, the Beverly Hillbillies, and or yellow gold? We have trend momentum and PAI still up. So that means the likelihood of this up move being over is short-lived. We're going to require, Al, one more time, the daily trend momentum and PAI to cross down. And once that occurs, I want to see price break the blue line, this trend line. That sets the tone for 2 is done in the initial confirmation. And as it stair steps down to break 1071, that's final confirmation. And by time price moves all the way back down that many points, $50+ range, my weekly will start turning and my daily trend momentum and PAI will definitely be down. That's how we know, based on price proving its intentions and the software confirming those intentions. And if not, if this isn't the end, or it ends up turning into this, then we're going to continue to see the blue trend line form support. So this is a hint, if I get the daily turning over and I sell Foreman and Workforce down, as I watch price come toward this trend line, I want to take aggressive profits because it could bounce in reverse and go higher. Everybody with me? So if I'm going to short this based on a 4-hour Foreman and Workforce, the daily turning over, and I go short, Greg Toussaint, expecting 2 is over and we're breaking down, then I'm going to take aggressive profits when price gets near the trend line, knowing that if it's not that, it's likely to bounce off the trend line and go much higher. Fair enough? And what happens if I'm in this? I take aggressive profits and it breaks the blue trend line. And my daily trend momentum and PAI are down and the weekly starts to show sensitivity to turning. Then I'm going to continue to scale in every time I get a chance, and downtrend continuation is unfolding. How cool is that? John Younghusband. Since I was so adamant the other day telling you I took the short trade and I put my stop loss up there and I took the short trade knowing that it could grind a little more. And what happened? I got in, got pipped out because I got to take profits, and it reversed and pipped me out, but nothing changed. And why did it start to go back up? That daily that was engaged, disengaged, it temporarily re-engaged, and it did rally back up, so I took aggressive profits, got pipped out. Then I went back short, because what happens when you break the gold line? It's likely to go to the purple line. Right? So it did some, went down, went up, pipped out, then I shorted it again. That's okay. And I took aggressive profits. But you see how you can get high probability trades, whether you want to wait for the cycles to do their thing, or you're impatient and don't want to wait or can't be in front of the computer, then just put your stop loss up here. Because the likelihood with this daily disengaging and heading down, the likelihood of a weekly turning over like this, the daily would then turn and break a new high, is very rare. Very low probability. Well, Gary's at well, not only would the daily have to re-engage, it would have to stay engaged, and it would have to force the weekly that's turning over to turn back up. That's how we would end up breaking over here. So is this down move over? I don't think so. The daily is still down. So I don't think this bounce right here is still one of these reversals breaking new highs. I still say we have further down. So the equation we were talking about is still intact. Yeah, it's chopped up and down, but we said it was going to chop up and down. And we said the likelihood for your short trade to end up running toward the purple line was great. So when I got in, it didn't quite make it. It reversed and pipped me out. Great. So it did it again, and it reached my take profit, and I took profits on it. Weekly still down, and we still haven't had the crossover yet. So what happens if we get the crossover with the trend momentum and PAI both down on the weekly? Then no question we're running down further, not only to touch the cloud, but to make a run toward the gold or the purple line. So this correction could last for weeks to come and turn into several more points to the downside while we're in the midst of a weekly style retracement. Right? Eventually the weekly could turn and engage up because the monthly is clearly pushing higher. So no, as I mentioned, long term, I don't think we're finished to the upside. Midterm, I don't think we're finished to the downside. So short term, I'm looking for further down. Andres, you got that? Monthly is up, weekly's depressurizing. If my weekly starts to cross to the downside, trend momentum and PAI start crossing down, and my monthly says no, then that weekly is going to slingshot up higher. And will definitely go higher than the swing point high. No ifs, no buts, no ands. If this monthly does not turn when the weekly starts to depressurize, then it's going to force the weekly to slingshot higher. Up and until then, so long term, I do expect we're probably going to get some higher highs. Shorter term, as my weekly's depressurizing, if my weekly continues to depressurize, yes, we could even get a crossover toward the downside. And if my monthly stays up, then we're going to get further down, followed by another push higher. So as long as my weekly is down, maybe it's another week before we cross to the downside here. But if my PAI stays down, then I'm going to look for the daily to do what? Continue to engage, disengage, engage, disengage, and journey to oversold territory. So John, if I get the daily to engage up again, it disengages, I can sell it. If I get the daily to engage up later on, and it turns back up, and the weekly stays pointing down, and then my daily engaging up disengages, can I sell that again? Yes. Expect it to go and break the purple line after that. At least make a run back toward the purple line. So I think this rally, based on what the weekly and the daily are showing, this is short-lived and will continue to stair-step lower. And if you're still in that short trade, continue to let it run. Because we are expecting this to continue further down based on a daily and a weekly. Eventually, that weekly should turn, my daily should bottom, the weekly turns, and the monthly still up, then wherever we are down here, we're going to ride it back up to at least that high, and highest of probabilities, we're going to make a new high. So say that again, paint that picture on the euro pound. If my monthly stays up, trend momentum and PAI stays up, when the weekly depressurizes and does not turn, then we're going to buy the weekly slingshot higher. Well, when should that happen? When the daily bottoms and reverses. Up and until the daily bottoms and reverses, we can go lower first. Amen? We might even run all the way to this goal line here, we reject it off the purple, we could run to the gold to then bounce and make another run at it. No guarantee we have to go that low before it reverses, but you get the drift. So Ichimoku automatically puts targets in sight and saying this is right around 73.40. Well, we're at 75.7. That could be 130 pips. Yeah, sure could. Well, how will we get there? The weekly turns over and continues to move to the downside. And my daily, day after day after day, continues to push lower. So where's another entry? My daily's down, my weekly's down, my 4-hour turning over back to the downside. My workforce topping and rolling. That is a quick scalp to the downside. Fair enough? So in closing, I don't think we're going to go breaking the high anytime soon. Longer term, yes. Shorter term, no. So continue to look to sell the rallies in the downtrend for as long as the daily and the weekly are down. I'll look for cycles in order to sell. I think this little rally short-lived and will break the purple line and head lower. Eventually, we're going to get a big rally back up to new highs, but it's going to take not only the daily bottoming and reversing, so we'll start to say, hey, we got a daily trend momentum and PAI up, but we're going to see the weekly start to turn back up as well. And that's when we get, wherever we are in the low, we're going to go back up and make a higher high. And as we depressurize on the weekly, that bodes well for further downside. As long as my monthly stays up, we're going to look to buy that dip and go back long. But first things first, we're going to go sideways to lower first. And the monthly's in control until it's not. Meaning when the weekly turns over trend momentum PAI and the monthly engages, then we're back to a downtrend continuation. But for now, we're in a corrective phase to the upside. Corrective phase to the upside. And short term, we're going to follow the daily and the daily and the weekly down, expecting this chop, chop, chop sideways to lower to continue.
Bob says on the daily, would I stop at the goal line, be good for a down trade?
Yes, and now that's a great point, Bob, because now we have resistance manifested several times on the goal line. So once we place a new short, do we need to put our stop loss way up here? No. If we have the daily still headed down and a weekly down, and I get a 4-hour to rally back up for say, and maybe it engages up and it disengages or whatever, can I use this stop loss above the goal line? Yes. I do about 5 to 8 pips above the goal line, and based on these spikes, I'd put it just above those little spikes. Use the goal line a little bit higher, and that would be my stop here as opposed to above here. All right? And what happens if we go breaking the purple line? We come back and retest that. If I go short at a break of the purple line, I can put my stop loss above the goal line. And if I come down and retest this like we did the goal line, and we get a low and a higher low over here, and it turns over, then I can use the purple line to hide behind eventually. But it all depends. As long as my daily trend momentum and PAI down, the likelihood of us breaking this goal line is almost zip. Everybody with me? The likelihood of breaking above the goal line without the daily turning is basically nil. Good point. Excellent. Golden Star.
Bob H.
Bob H. All right, let's switch gears, Andres, and look at a little Russell 2000. Again, is this part of the correction over, or are we still further to go? Be careful on this Russell 2000 to the downside, because what are we coming to? The goal line. The goal line should act as support. We could even bounce off of that and go higher. Well, my daily, just like the S&P, red's trying to hook, but blue says no. Money flow changed angle, but it's still up. It's not flat, and it's definitely not down. And as these two come together, they both are going to be required to hook. If we get another daily extension and we don't see that engage and they both push up, then we're going to look for that bounce. 4 hour. So right now, my 4 hour is still pushing lower. What can we see? Chop, 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 a little sideways, maybe a little bit lower. Maybe we come to the cloud, maybe we don't. Maybe we come to the goal line, maybe we don't. But what should happen? If that 4 hour starts engaging off the goal line, I'm going to scalp to the upside. Because my daily still pointing up means the 4 hour should slingshot higher. So Andres, you got that? Russell 2000. We're coming right now towards the goal line. Got a little bit further to go to touch it. But if my 4 hour starts engaging, that's a strong sign and symptom that we're going to see this line hold. And that line is down at 1008. So another 3 points. Could we see this drop another 3 points, then bounce and go higher? Sure. When would I buy it? I would buy it when the 4 hour engages up. And if it engages up and this stays up, then no question we're going to bounce and make a run toward the high and likely to make a run up here towards 1056. So is this over with the S&P and the Russell? Or is this just another dip before another push higher? If my daily still stays up and my weekly still stays up, then it's not over and it will go higher. Everybody with me? If my daily and weekly are up, this little pullback is going to be short-lived and give me a higher low and then bounce to a higher high. Where should this go? It should suck it down towards 1008, another 2 points, and then look potentially for that 4 hour to engage and bounce off of 1008 and look for it to rally up. But before I go long, I'm going to wait for my what? 4 hour to start engaging. When is that likely to occur? When my 1530 1 hour starts bottoming and reversing. And right now we don't quite have that because it disengaged, engaged lower, disengaged, and could turn over as we go down to 1008, make a new low, could flip right back over. But eventually my workforce is going to turn and my 4 hour is going to engage. Got that? Andres? Where should we rally to? We should rally back toward the previous high and make a run probably towards that 1056. And what is that? On a daily Ichimoku, we should reverse, head up towards 1056. Is it guaranteed to get that high? As long as my weekly and daily are up, we should grind and grunt our way towards that target. And this down move should be short-lived because the daily's not flinching and turning. Blue says no, so that means red is going to turn and hook out and continue higher with blue. Fair enough? So what should this look like? This is going to turn back up. Blue's going to extend. Price is going to bounce, and we're going to ride back toward this high and likely to go towards 1056. GDX. GDX is rallying. Yes, it broke because the gold rally. We could see this even rally a little bit more. Remember what I said weeks ago, that it's likely to make a run at this battle zone. If it breaks it, it could go up towards the top of the cloud and continue with that deeper correction before reversing and going back over. When is this up move likely to end? When the daily trend momentum and PAI flips. What happens when the daily trend momentum PAI flips? I expect to see the weekly engage down. Any questions? Well, Gary, is 5A done on gold and we're in the early stages of going higher? If that's the case, this low is intact and we're in the early stages of going much higher in GDX. I don't think that's it. I think we are going to slingshot back down when the daily flips. Trend momentum and PAI start heading back down. I'm going to expect the weekly will follow suit. It's done it many times. Engage, flip, daily up, daily down, engage, 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 daily up, daily down, engage. Got it? So when the daily's down, weekly will engage. So could we grind a little higher? Sure. Where did we grind to when we talked about GDX the other? Well, it went towards the purple line. Isn't that a thing of beauty? On the daily, It broke our resistance and it's running toward the top of the cloud. Could we go higher and still bounce off of that purple line? Yes. Right? We could grind into the purple line, top and roll, and engage back down. That's a no-brainer sell. If I get the weekly to engage off of the purple line, that is a beautiful sell. What are the signs and symptoms of a top and reversal in this rally over? Daily trend momentum PAI down. Everybody good? Trend momentum PAI down. GDX is topping and reversing. And as my daily trend momentum and PAI head down, the weekly follows suit by engaging. That bodes well for not only a downtrend continuation, but breaking a new low. If I had to guess, I would say this is not the bottom reversal on GDX, just as I still say it's not the bottom reversal on gold. We still need price to go on and break some levels it should not cross, including on gold breaking 1191, but including GDX going up and breaking not only this resistance level, but this one up here and start grinding through. If we see GDX start breaking above the cloud here on the weekly, Houston, we have a problem. As far as another push lower making new lows, Houston appears we've bottomed and reversed. And we start to buy the dips in the uptrend. So my anticipated move is the weekly will engage back down. It will engage back down. It will engage back down. When is it going to engage back down, William Bruce? When? You say it, but when? Well, we know in order for it to engage, the daily trend momentum and PAI must head down. Doesn't guarantee it's going to do it, but it means if it does, it's guaranteed because the daily trend momentum and PAI head down. So our first possibility of that weekly turning and engaging down is going to be when the daily trend momentum and PAI head down. And we've seen that over and over and over when it was the big slingshot or even when it's the smaller slingshot. When does it occur? It occurs when the daily flips direction. And this is part of that last little push on the daily. But it occurs when the weekly turns, when the daily flips. Weekly turns when the daily flips. Everybody good? Weekly turns when the daily flips. Weekly turns when the daily flips. So is it guaranteed to flip when the daily turns? No, but certainly it can. And the only time it's going to flip and turn is when the daily turns. So that's why this gold could grind a little higher, but probably not going to go way up here because the daily is going to flip. And when the trend momentum and the daily finally do flip, we're expecting to see the weekly turn again. So I'll have a red line over here in the future in the coming days. Right? So we can put one over here in the future and say, yep, this daily should turn and start flipping once my daily trend momentum PAI cross. Fair enough? And that means that this down move is probably not going to make new lows yet until after the weekly engages. Until after the daily trend momentum and PAI turn down. That's when we're likely to see it. So GDX could grind a little more. If you took this bounce from 12 to 14, if you managed to take that, I would definitely peel off a lot of aggressive profits. That yes, we could go a little bit higher, but I'm not expecting a breakout this way. I'm expecting a reversal this way. All right? And that's why whether I trade stocks, futures, commodity, ETFs, I don't care what we're trading, it's still the same scenario. Cycling time frames gives us signs and symptoms. And based on this rally on gold, which we said gold was going to rally to 1125, 1135, so therefore GDX would rally the same. And once gold finishes the rally and starts the downtrend, GDX is going to revert back to the downtrend. And if gold goes down to break its low and breaks below 1,000 and below, GDX is going to break below its low over here And what was that? 1248, 1238. So yes, GDX could drop over $2 easy as gold finally tops and reverses and heads down to 1,000 and below. GDX is going to break below 1238 and below. So I'll go on record as saying I don't think this is the bottom reversal for GDX. And even if it turns out it is, we know its signs and symptoms to look for. Cycling time frames equal signs and symptoms. And when the daily does turn over trend momentum and PAI, a sign and symptom we're not going to go breaking new lows and we continue to grind higher would be the weekly laughing at the daily turning over, going, not happening. I'm going from oversold, overbought. I'm going from oversold, overbought. And then, yes, we would start to see this grind much higher. Gold go above 1191, et cetera, et cetera. So we'll have numerous signs and symptoms to tell us, do we buy dips in an uptrend for many years? Or are we still selling rallies in a downtrend before buying and holding? Only time will tell as the cycles unfold. So good day, good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. I know we covered a lot. I don't know of any other service out there that covers this many markets, this many items or symbols, however you want to look at it, but we touch base on anything. So if you have any additional ETFs, stocks, commodities, futures, Forex, anything you want to look at, if it's in our market watch, we can review it and I'll give you the top-down analysis. And you know how to do it. You simply follow the direction of the trend momentum and the PAI, and we follow those cycles. And as they cycle, they give us deliberate signs and symptoms. So yes, it's because the daily trend momentum and the PAI heads lower that forces a weekly to engage over and over and over and over and over and over. But not every time the daily turns over does the weekly oblige. So there are times when the daily could turn over and go, nope, weekly says no, then we know the daily will slingshot higher in the direction of the weekly. Then when the weekly's ready and the daily turns over again, then the weekly turns and we get that big, huge move down. So we've been honestly pegging the moves on any of these signs, symptoms, symbols, whether it's gold, futures, Forex, stocks, commodities, doesn't matter. Simply by trading the foreman and the workforce, that's when we trade up and down. We get a buy cycle with the foreman and workforce trend momentum PAI up, and we get a sell cycle with the foreman and workforce trend momentum PAI down. That's how we trade. Then as we cycle in the daily, the weekly, the monthly, that helps dictate whether we're in trades for days, a few hours, a few days, a few weeks, a few months, or a few years. Based on the cycles, how they react. When my weekly turns over, does the monthly follow or does the monthly stay, right? So the weekly, does the weekly engage down when the daily turn? That means the correction is over and downtrend is continuing. If the weekly says no when the daily turns over, then we'll look to buy the daily and ride GDX even higher. Simply cycling time frames equals trading opportunities. Cycling time frames equals signs and symptoms. And as they cycle, the best news is no matter what happens, no matter who becomes president, no matter if we get a true market crash again or the credit crash, the credit bubble burst, etc., no matter what type of market condition unfolds, the time frames are still going to cycle up and down, and you'll still be able to trade it with high probability. So join us again tomorrow. We'll see you then. Take care.